All right, traders, welcome to today's recap. This is Christian from our Strawberry Trade Group, and this is your recap for Wednesday, June 5th. June 5th. Risk disclaimer in front of you guys. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So, very nice trending day. We have not gotten a lot of these trending days. It's been mainly a bit of chop. It's been a bit of like a gap up and then a give back. And the first couple hours of the day, a little bit of chop during the middle of the day. And, sometimes we've been getting, particularly this week, a late end of day move that kind of saves the day. This was a different day. This was more of a trending day where if you bought the open and sold the close, you did very well. If you've been trading for a while, you know that we just don't get many of those days. It's more often than not, buying the close and selling the open is the more profitable trade, or the more the better way to go, and to sell some of those opening gap ups. But you could see, and this is why I have this spreadsheet sorted by this column over here, which is percentage change to open, just to see where the momentum was for the day, what areas were being bought versus what areas were being sold. So this in particular, you could see that growth had a big day today, right? So if you look at VUG, which is the large cap growth ETF, was up 1.7%, and it gained 1% over the trading session. Value still gained, but it was kind of interesting because I checked these when I wrote my midday note, and value was only up about 0.2 of a percentage point. So it really kind of tacked on some gains in the afternoon. But you could see today was a growth day. VUG up 1.8% for the day. We'll talk a little bit about interest rates too, but I want to jump to look at some of the moves that happened over the course of the trading day. Biotech, we really haven't seen too much of that. That finished up over 3% and rallied about the same over the trading session. And then semis, which is the first chart that I'm going to start with today. Look at the move that we saw in the semiconductors. That's a 4% move. Very interesting. I'm just going to take a step back here because going into this week, we just did not have many sectors. Most of the sectors kind of just looked like they were in a range. And I thought as we headed into the month of June that it was going to be really interesting to see who was going to take the ball and run with it if the market was constructive. And you can kind of see it's more of your riskier areas of the market. So the semis up huge today, and led by this little company called NVIDIA. You may have heard of it. That is the market leader, and as it should be, it's making new highs. So, really interesting to see. This is one of the things that I thought would happen after earnings is that, if you get any days of weakness, buyers are going to come in and buy this thing. And that's what we saw towards the end of the month. Maybe there was a little bit of like pension rebalancing that was happening end of month, and there was a little bit of weakness, and the name didn't stay down long for long. It filled this gap in here. And notice that the value area is kind of like the checkpoint. A lot of strong earnings names actually, came in here and touched the top of value. This didn't need it to do it. But I got involved in this name on Monday and was rewarded the last couple of days with the price action. And I was, standing ready to kind of, I was taking targets, and I'm like, hey, I'll add back if it comes back in a little bit. It just didn't get to do that. All right, let's talk a little bit about before I go any more into the into some moves. I just wanted to talk about the economics because I thought that those were important for the day. Remember that one of the most important things that I think in terms of economics is leading indicators versus lagging indicators. The ISM data is a leading indicator, right? Other economics like GDP, those are lagging indicators. If you've taken macroeconomics in college and you paid attention, you know that ISM, PMI data, those types of things, as well as stock prices, are a leading indicator for the economy. And just very interesting, like the good news today, right? Because look at the services number, came in 53.8 versus expectations of 51. Anything above 50 is expansionary. The market took that as really good news and rallied, right? right? Remember earlier in the week, manufacturing missed, but services is staying very strong. And also, we will get the real jobs report on Friday. This ADP number sometimes is like an approximation. Sometimes it's right, sometimes it's wrong. I would rely more on what we see on Friday, but we know that the jobs report hasn't been sizzling hot. So good service data with maybe, lukewarm jobs data. And, that's that the market interpreted as good news. And we went off and running with that. Just keep in mind tomorrow, we are going to get a couple other things like initial jobless claims, and then Friday will be that jobs number, right? No Fed speakers until Wednesday, until the Fed report. Just to kind of go over a couple other things here, and um, let's say congratulations to the Qs because they made it to new closing highs for the year. And that's a nice break of the value area. One thing that I'm going to talk about really quick is how we assess this earlier in the week, right? So if you viewed my video on Monday, also went through this with members throughout the week, that if the price action was kind of oscillating around the bottom of value, I mentioned this 450.83 level. I said if price can maintain inside this value area, that's the green light. If it breaks back below, that's the red light or the yellow light to be more cautious. We oscillated around here and then really started a trend. Notice that we didn't even hesitate at that 459.87. I thought that we might actually pause there or break through and retest, but price didn't want to do that today. Just a lot more buyers and sellers were absent for the day, so very strong. So just to look at the S&P too. I'm not going to go through every chart here in this video, but very strong as well. Broke through the value area, and that's also, I believe, new highs there for the S&P, right? New closing highs for the S&P, breaking the June value area. So again, just quickly in summary, coming into this month, it was going to be kind of a question of what outperformed, and we've got growth stocks and we've got semiconductors really stepping up, more risk on areas of the market. Just a couple other charts, and I'll just do the sectors for now. But here's XBI. Again, pleasant to see biotech do really well. I picked up on some of the strength in medical devices. Again, not blasting off, but if you go through these individual names, you could see ISRG made it to new highs. I think that's very impressive. I liked also the chart of Stryker, which I went long yesterday. Again, not blasting off to the upside, not as much as like an Nvidia, for example, but nice move and nice progress. And I'm looking for that to get to this blue line up here. All right. One other thing that I thought was interesting for the day, if we bring up the breadth for the day, right? And this is something that I go over every day in my Substack note, is what's going on with the 4-week new highs versus new lows. If you look, there was actually more new lows today, and the S&P 4-week new lows were 53, 4-week new highs were 49. Is that a problem? Is that a major divergence? Well, I think if you go through the individual names, you'll find that it's certainly not a great thing, right? And here's the midday note that I put out. This is on ttgtrading.substack.com, right? And so if you go through and if you look at this, there's a lot of areas such as what underperformed today, right, was things like energy, utilities, right? Banks underperformed today. So again, more value groups, right? More, I don't want to say exactly risk off areas of the market, but consumer staples were one of the worst performers. So it is a bit concerning to me that there was more 4-week new lows, but I think when you drill in, and see that it was more riskier areas of the market, then I kind of view that as an okay. But still, I still think you have to be disciplined in this market, right? And I personally would like to see a little bit better growth. But if you're strictly, more stronger breadth in terms of these 4-week new highs versus new lows. But if you're a growth investor, you are absolutely loving today's price action. All right, just a couple other things. So make sure that you are signed up. You get all this for free. Anything in terms of positions. and my watch list and so on and so forth, you do have to pay a small fee for. But I go over exactly levels to be watching every day. I go over anytime I get into a position, right? I give you the rationale for the position. So even if you're a part-time trader and you can't be in front of the screens all day long, and you're like, hey, he took a position in HBQ or he took a position in TMDX, right? I give you the chart and I give you all of the criteria of why I'm taking that trade. Same thing with the solar group, right? I'm looking for a plus 13% move to that bottom of the value area, right? So that was a new long for me. I do like how this group is acting for solar, ENPH. Those are the two top holdings in this ETF. But I do this on a daily basis, but please, check it out for a month. It's very cheap. But you could get the whole thing. And so kind of a glimpse of macro, what the overall market is doing, what the internals look like, and then what I'm doing in terms of individual stock trading. All right, guys, that's it for today's video. Really great price action. Let's hope it continues, but it's a great start to the first week of June. Have a great night, everybody.